Lecture 3. The environment of accounting research. Alright, research on accounting issues is conducted in a dynamic environment. Okay? Don't be surprised, we have all kinds of standards coming from different parties, different regulators. Therefore, in such accounting issues, okay, we need to be familiar with those rules, especially those pronouncements from different authorities. Okay, first let's talk about where do accounting rules come from. Accounting standards are influenced by a variety of parties. We have, for sure, the federal bodies, right? They're dominant in this rule making. Okay, the accounting standards are influenced by tax laws because we do not want to create conflict. Right? Accounting standards are influenced by specialized industries. Right? Especially, issues from the practice. Right? Accounting standards will be generate when there's a disagreement, right, among constituents. Also, for sure, accounting standards are influenced by professional organizations, right, international parties, litigation concerns, and also public concerns. In this lecture, we focus on standard setting process in accounting. So we introduce those major standard setters and their major pronouncement. Right, first, on the top of the list, we have Security and Exchange Commission, the SEC. Right, SEC was established by the Security and Exchange Act of 1934. Before that, we know there was a market collapse, right? Recessions, right? Partly due to the unregulated market. Then we have the SEC. It tries to ensure public companies, right, fully and fairly disclose all material facts. So it's about their information disclosures. And SEC is statutory authorities to issue rules and regulations, which means the legislature grants this role to SEC to issue laws and enforce the law. And someone believes the office of the chief accountant is the most powerful accounting positions, right? Its chief accountant is most powerful accounting jobs in the world. And this office, OCA, is further divided into three groups, right? Together with the guidance from the Office of Chief Counsel. The three groups are accounting. This group basically is for domestic private companies, making rules for domestic private companies. And we have a professional practice, right? This group develop auditing policies. And then we have international affairs. It's about international policies. The three OCA groups serve 5 SEC divisions. We have a corporate finance division, right? This division reviews the financial statement disclosures of all public companies. And the frequency is at least once every 3 years. And this corporate finance and also interpret various security acts and also provide recommendations. One important guidance from this group is the staff legal bulletins. Next, we have the trading and market right? This division basically oversees the market participants, for example, right, stockbrokers, right, and self-regulatory agencies. They're going to oversee the Security Investor Protection Corporations, right? And these institutions insure member brokerage firms against non-fraud or market conditions related failures, basically. Right, next we have enforcement divisions. Right, it investigates potential security law violations. It can actually file civil lawsuits in federal court. Next is investment management divisions. It regulates the asset management industries. Typically it covers investment companies, right, and insurance companies. Next we have the SEC's think tank, the Economic Risk and Analysis Division. This division provides subject matter expertise in policy decisions. It develops analytic tools and works with industry experts to understand market. Right, this division is divided into, several subdivisions, has 11 offices on different subjects. And finally, the examination divisions. The purpose of this division is to protect investors. Right, administrators, the SEC's national exam, and also it's going to have a on-site inspection, making sure rule compliance and free of fraud, those kind of things. It organizes different programs. Example, we have the FRNRA. This is a financial industry regulatory authority. This is a private non-for-profit organization. Regulates brokerage firms and their staff. The purpose is to protect investors and try to ensure integrity of the capital market. It's a very powerful organization. And this FISIO, FSIO, it's FINRA and the security industry oversight. Basically, it oversee the examination program. And we have the Office of Risk and Strategy. The SEC itself does not make accounting standards. Rather, it delegates accounting standard settings to FASB. And we're going to discuss FASB and related parties in the next few slides. And the SEC recommends a principle-based or objective-oriented standards. So unlike the rule-based standards, the principle-based standards basically provide broad guidance, so it's going to require your judgment to apply the general concept to specific cases. The rule-based standards are easy to implement. We just follow specific rules. Okay? However, in many cases, rule-based standards is going to create conflict. And the principle-based standards offer more flexibility, and by providing a big framework and the big principles, okay, and we use our judgment to interpret to record accounting transactions, and by doing this we can avoid a lot of conflicts, but the negative part of principle-based accounting is too much flexibility, right? It's going to create inconsistent accounting practice. So we have to make a trade-off between those two systems, right? Historically, U.S. accounting standards are rule-based, and SEC want to improve the whole system towards the principle-based accounting standards. All right, so SEC delegates a accounting standard setting to the Financial Accounting Foundations, FAF. Right, FAF's mission is, through governance and oversight, ensures that Financial Accounting Standards Board, FASB, and the Governmental Accounting Standards Board, GASB, establish and improve high-quality financial accounting and reporting standards. Right, so the FAF's mission is to oversee those two standard setters, the FASB and GASB. Okay, all the three, FF, FASB, and GASB, and AF, they report to the Financial Accounting Foundation trustees. This foundation trustees comprises 14 to 18 members from varied background. Right, we have people from the accounting firms, right? People from the financing firms, and people from the regulators, people from big investors. So they have a different background, making sure that those accounting standards are fair to everyone. Right, the FAF is a non-profit organizations. So we know FAF oversees both FASB and GASB, so let's talk about FASB, which is Financial Accounting Standard Board. So the FASB is established in 1973, and this is an independent, private not-for-profit organization. The purpose of FASB is to establish financial accounting and reporting standards for public and private companies and not-for-profit organizations that follow the gap. Basically, it covers all the non-governmental entities. Okay, establish and improve accounting standards. The FASB has a board, the FASB board, which comprises 7 members. They are from CPA firms, from corporations, or from the universities and from industries. And FASB staff, there are about 60 professionals working with FASB from various backgrounds. Okay, the FASB also established various advisory council. For example, the Financial Accounting Standard Advisory Council will guide FASB on which project to pursue and on task forces to be organized. Emerging Issue Task Force, right? It works on some emerging the new issues. It's going to figure out how to record those new issues. Whether we're gonna making a new rules, new standards, right, will be discussed with this task force. And then we have the Private Company Council. It's gonna focus on private companies' accounting needs. All right, so pronouncement from FASB. Since July 2009, okay, the only authoritative accounting rules, or GAP, is the FASB codification of accounting standards. It has superseded most accounting authorities, right? This is the one and only one. We also see accounting standard update, ASUs coming from FASB. It will be issued by the FASB or issued by the Emerging Issue Task Force or from the private company councils. Basically, those are any updates or patches. Okay, once approved, it will get incorporated into the FASB codification. We will discuss FASB codification in the next lecture. So prior to July 2009, what do we have? Prior to July 2009, we have Statement of Financial Accounting Standards. Okay, those are usually referred as GAAP rules. Statement of Financial Accounting Standards were issued by FASB. And we also have a lot of interpretations. We have interpretations of financial accounting standards, right? And we have AICPA Accounting Research Bulletins, ERBs, and APB opinions. And this APB is Accounting Principle Board. The Accounting Principle Board is created by AICPA, right? Accounting Principle Board worked on accounting rules basically from 1959 to 1973. So it's the predecessor of FASB. So its opinion is also an interpretation of financial accounting standards. In addition to interpretations, we also have a lot of guidance. Previously, we have the Technical Bulletin. It provides timely guidance on implementation issues. Basically, the Technical Bulletin allowed firms to submit through technical service inquiries. But these responses were not authoritative, but still useful, the Technical Bulletin. We also have the FASB Staff Positions, FSP. It's an application guidance. Right? It's going to guide the people how to apply the accounting rules in practice. The staff positions was posted on the website and remain until incorporated into staff implementation guides. So those are all previously what we do. Currently, the FASB's Technical Inquiry Service, helps people understand FASB standards. So you can submit your questions. And we also have a Transition Resources Group, TRGs. This is a forum for stakeholders to learn from others and ask questions related to implementation issues. There's two places, right? You can submit a formal request or you can post questions in this forum. Right, the Emerging Issue Task Force, EITF, is an important component of FASB. Right? It was established in 1984. Basically, the purpose of having this task force is to address industry-specific issues that are not covered in the FASB's pronouncement. So the EITF issues ASUs issued update in sequential orders. And this is how the EITF works. Right? The FASB updated its operation procedures in 2024. Basically, first, the EITF Agenda Committee is going to identify issues. It's going to add items. These items become public and open for discussion. If there's no added items, a summary report will be generated. Okay, then the member is going to have a vote. Okay, if they pass the vote, it's going to be sent to an agenda and a memo is prepared. Right, if it moves forward and the FASB board is going to vote again, and if it's approved, then they're going to prepare update, accounting standard update. The private company councils was established in 2012 to provide guidance to private business entities. It can also issue SUs in sequentials, just like the ERTF. The private companies are different from the public companies in many ways. For example, the number of primary users, right, and their access to management will be different. Right, the investment strategies will be different. Ownership and the capital structure, accounting resources, and new financial guidance education will be different. So, as of 2024, only 7 standards are issued by the private company council. Because the FASB standards are so important that the FASB is very cautious with the standard setting process. So we have the FASB due process. Sometimes it may take many years to pass the final standards. So what are the steps we have? First, we identify problems. Then we're going to collect input from various parties to see if the issue is worthy of consideration. Sometimes it's not worth all the effort. Okay, once we think it's important, we're going to establish a task force, have research staff working on these topics, and issue a discussion memo. Then we're going to figure out a draft, a preliminary update draft, and hold a public hearing. During this period, we're going to receive comments from various parties from the public side. Okay? And have roundtables to discuss about it. Next, we can analyze results of the investigation, communicate responses, and conduct additional public hearing if that's needed, and issue the second exposure draft if there's a major revision, and finally issue a final update after analyzing comments. So that's a lot of work to pass accounting standards. Right? All the draft and all the communication between various parties are public, okay? So if you want to study any accounting standards, okay, we're going to see their original draft, we're going to see common letters from various parties, we're going to see SC's response to those common letters. So back and forth, and finally we have the final standards. Right, so if we want to have a principle-based accounting standards, we must have a solid conceptual framework. So let's talk about the FASB conceptual framework. So why do we need a conceptual framework? Sometimes accounting issue will arise, but there's no rules, no authoritative rules on that issue. So what do we do? In this case, right? In this case, we are going to research on this issue and develop our own conclusion. as long as it is consistent with the conceptual framework, we'll be fine. Now, FASB carried a long-range project called Conceptual Framework Project. And this project is going to eventually lead to the Statement of Financial Accounting Concept, SFSC, okay, in which it describes concepts and relationships that underlies accounting standards. What are those concepts and elements? We have elements of financial statement, right? So what is asset, what is a liability will be defined here. Capital maintenance, unit of measures, criteria for measurement, and qualitative characteristics. All these are important concepts that eventually is going to build a solid accounting standards. Right? For example, if there's a new transaction arises and no one have seen it before, so what do we do? Okay, we're going to use this conceptual framework. Okay, follow this SFSC. We're going to determine what elements it is. Okay, if this is an asset, if this is a liability, okay, we define it, and then we're going to follow the way how to measure it. So if we have something coming up we have never seen, although there's no accounting rules, but if we use this conceptual framework, we should be able to record it appropriately. So previously, the FASB issued conceptual statement, has issued several conceptual statement. Okay, number 1, 2, 4, and 6 were superseded by subsequent conceptual statement, but 5, 7, 8 are still there. It's recognition measurement in financial statement using cash flow and present value accounting measurement, and comprise superseded FS a new concept statement. So this is number 8. Number 8 replaces all those previous one. However, these conceptual concept statements are not considered authoritative. Okay, they are not considered authoritative. So in practice, a CPA accountant don't have to worry about these, the concept statement, right? Because they don't have to follow it. They follow the accounting rules, accounting standards, not the concept statement. But these rules will be very useful for researchers. Okay, we can apply these concept statement on new transactions. I think the 5 and 7 is also superseded. So the only available is number 8. This is the new one. Compromises superseded FFC's a new concept statement. So this is the only one left. Next, American Institute of Certified Public Accountant, AICPA. Right? If you take CPA exams, for sure you know AICPA. AICPA was the standard setters before the FASB. The AICPA's Committee on Accounting Procedures issued the Accounting Research Bulletins from 1939 to 1959. Some of those still apply, are still authoritative, but they are consolidated into the codification. And after that, that's the Accounting Principle Board, okay, again from the AICPA, issued APB from 1959 to 1973, and after that, that's FASB. Although the AICPA no longer the standard setters, the Accounting Standard Division, previously through the Accounting Standard Executive Committees. Now it is known as the Financial Reporting Executive Committee. Influence standard settings through common letters, okay? Clearing GASB and the FASB's common letters and issue papers. Right, the FASB is the Federal Accounting Standard Advisory Board. Right, FASB is standard setters for the federal accounting standards. Right, basically, the local government agencies, right, the state, the cities, they can follow GASB rules, and then the federal levels can follow the FASB rules. The ACCPA also issued the statement positions. Right now, the role has been taken over by the FASB. And other publications by ACCPA include U.S. GAAP Financial Statement Best Practice in Presentations and Disclosures. Right, those are publications by ACCPA. Right, let's talk about the Government Accounting Standard Board, the GASB. We know the GASB is brother of FASB because both are overseen by the Financial Accounting Foundations, right, and the FAF. Just like the FASB, it has 7 members. The GASB was created by Government Finance Office Association and the National Association of State Auditors, Controllers, and Treasurers. Right, it uses the same due process as FASB. And its rules, its pronouncement is now at the highest level of government U.S. GAAP. Okay, that's for local, state, local, okay, government agencies to follow, but not at federal level. Like FASB, the GASB also has advisory council. Right, the advisory council is Governmental Accounting Standard Advisory Council. Like the FASB codifications, we also have the GARS, Government Accounting Research Systems, codifies, okay, or GASB statement, interpretations, technical bulletins, and concept statement. So it's also it's a codification, right? The GASB codification can be seen as. All right, so the U.S. Comptroller General's Yellow Book, because it's a cover is yellow one, it's a codification of audit standards for government organizations in the United States. Okay, we call this Yellow Book. And the U.S. Congress Single Audit Act of 1984 requires all state and local government who receives a certain money from the federal assistance, okay, will have an audit from the federal government, called the Single Audit Act. Okay, I think the threshold has been revised later on. Right here we have other organizations, and that has some influences in the accounting standard settings. I just take a few, make sure that you recognize them. Sometimes they're gonna abbreviation will appear somewhere, like the Institution Management Accountants, IMA, right? And this is AAA. It's not for the auto AAA. This is American Accounting Association. It's a very powerful organization that's handling theoretical research and publications. The AAA has a lot of industry leading, peer-reviewed journals. And then we have Institute of Internal Auditors, IIA. Right, so take a look at those names, making sure you recognize them. All right. And finally, let's discuss about GAAP, the general accounting principles. We often hear this term US GAAP. So what is US GAAP? Okay, this is basically a technical accounting term. Right, it means all the conventions, rules and procedures necessary to define accounting practice at a particular time, and we call these GAAP. And we know GAAP will change. GAAP will change. The two functions of GAAP is first is measurement. How do we measure expense? Right? How do we measure revenues? And then disclosures, provide a necessary information for users' decision making. And how do we use GAAP? The financial statement must be in conformity with GAAP in order for CPA to express an opinion on them. Right, so what are GAPs? And the pre-codification, what is a gap? We rank these pronouncements from the top level to the bottom level. Okay, all these are gap. The top level we have the FASB statement, APBs, ARBs, SEC rules. Right, so the top level. And followed by level B, we have ACCT industry guides, SOPs, and FASB technical bulletins. Okay, they also gap, but the level A has have more weight. Next, level C, we have ACCT practice bulletins, EITF, SEC speeches. Okay. And level D, we have ACCT interpretations, FASB interpretation guides, industry practices, unclear SOPs. And at the bottom, okay, not so influential, but they're still gap. The APB statement, ACCT issue papers, FASB concept statement, ISB statement. This is the International Accounting Standard Board. Journal article, or even textbook, will have a little bit influence. Okay, but these also regarded as gap. Now, post-codification. What is gap? We only have two levels. We have authoritative. Okay, most prior levels A to D, and some level E. Okay, are authoritative. Okay. And what is non-authoritative? We have most level E and some level D are non-authoritative. Right, so after we have the codifications, because most of these things are in the codifications, once they are in codifications, they are authoritative. So A, B, C, D, and some E, selective some E for sure, journals, articles, textbook are not. They're not. They will not be included in the codification. Some E, maybe the APB statement, okay, will be included in the codifications. They become authoritative. And the rest of E are non-authoritative. Non-authoritative. It doesn't mean they're not useful, but they're non-authoritative. They can be a second evidence if you want to support your conclusions. If a non-governmental source is not found in the codification, it's not a gap. So it's very clear after the post-codifications. So what is a gap? Anything in the codification is a gap. Okay, that's easy to answer these questions. Accounting authoritative support. So under Rule 203 of ACCT Code, Professional Conduct, if the entity's management believe that the circumstances do not warrant compliance with accounting standards, an exception is permitted. Under these circumstances, however, the auditor's report must clearly disclose the nature of the exception and the reason for it in the financial statement, right? So you have to convince users why there's an exception. Or references to authoritative pronouncement usually provides adequate support for accounting decisions. Accountant forced to rely on lower levels of support must often build a case involving multiple references. Okay, if you want to build a case, okay, if you don't have anything to follow from the high level authoritative pronouncement, you can build a case by relying on low level pronouncement, but you have to provide multiple references. You have a primary support. Those are general applications, special applications, and they're going to provide one or multiple secondary support. Those are from the official publications of bodies and other sources like SEC stat bulletins, right, FASB technical bulletins. So when you provide multiple support, maybe you can build a case. You can convince users, okay, it is okay to make an exception. Right, that concludes this lecture.